最近都不知道该把纸卖给谁了。
I honestly don't even know who to sell paper to anymore. The market is just too sluggish. In all the years I've been in this business, this is the first time I've seen this. A ton is 300 yuan cheaper than the market price, and no one wants it. Even if I drop it by 500, no one's interested. I've still got over 2,000 tons of special price stock. Any boss out there who can help me out? The man in the video expresses the difficult situation faced by the paper industry in China. With decreasing demand and high inventory, paper prices have dropped significantly, and the entire industry is facing unprecedented challenges. In recent years, China's GDP growth has slowed from double digits to moderate growth, and the purchasing power of the middle class has weakened. The demand for high-end and packaging paper has shrunk, putting pressure on the profitability of paper companies. This trend has caused a ripple effect in industries such as retail and manufacturing. At the same time, the economic downturn and the rise of electronic media have led to a decline in demand for industrial and cultural uses for paper. Recent reports suggest that the Chinese paper industry may be heading into a cold winter. Even Chenming Paper, once a leader in the sector, is now facing a sharp decline. Recently, Shandong Chenming Paper Holdings released its 2024 annual report and 2025 first quarter financial report. The data shows that in the first quarter of 2025, Chenming Paper's revenue dropped significantly to just 797 million yuan, a year-on-year decline of 88%. The net profit attributable to the parent company's shareholders was a loss of 1.45 billion yuan, a sharp decline of 2,600% compared to the same period last year. At the same time, Chenming Paper's 2024 annual report also raised concerns. The report showed that due to adverse factors like production limits and maintenance shutdowns, the company's 2024 net profit attributable to the parent company turned into a loss of 7.4 billion yuan, a significant decrease compared to the previous year. Regarding the drastic drop in performance, Chenming Paper explained in the report that the paper industry's newly released production capacity in recent years had led to a short-term market imbalance between supply and demand. Specifically, the price of white card paper, one of the company's main products, plummeted due to the supply chain imbalance, severely eroding the company's profitability, which ultimately led to a loss. To reduce its losses, Chenming Paper implemented production limits and shutdowns at some of its production bases starting in November 2024, while also conducting machine maintenance. But because the maintenance period lasted for over 3 months, the company failed to resume production on a large scale. As a result, its A shares and B shares have been placed under additional risk warnings by the Shenzhen Stock Exchange. Adding to the challenges, Chenming Paper is also facing financial difficulties, with some debts overdue and bank accounts frozen, further highlighting the enormous financial pressure it is currently enduring. On April 25th, the board of Chenming Paper passed a resolution to suspend the construction of the Huanggang Phase 2 project. This project, launched in 2020, had an initial planned investment of 12.8 billion yuan, which is intended to produce 1.5 million tons of cultural and white card paper and 520,000 tons of mechanical pulp, along with supporting infrastructure such as cogeneration, wastewater treatment, and dedicated docks. But because of the oversupply in the industry and the continued drop in the white card paper prices, the company's profit margins have been severely compressed, and the project's feasibility and expected returns have significantly diminished. At the same time, Huanggang Phase 2 is a heavy asset project with a large upfront investment and a long recovery cycle. Under the tightening financial environment, both in and outside of China, Chenming Paper has found it difficult to assemble syndicated loans within reasonable cost ranges. Both financing progress and costs have encountered severe problems. Ongoing capital expenditures have not only failed to bring the expected returns, but have also further drained the company's liquidity, resulting in rising debt pressures and liquidity risks. Meanwhile, reports indicate that Chenming Paper stock has been downgraded to ST Chenming. Since February 21st, as the Huanggang base has been shut down for more than 3 months with no sign of resuming production, Chenming Paper has reached the insufficient production capacity risk standard in Article 981, Clause 5 of the Shenzhen Stock Exchange's listing rules. As a result, its stock has been placed under other risk warnings, and the stock abbreviation changed from Chenming Paper to ST Chenming. The daily price fluctuation limit has also been narrowed from the original 10% to 5%. ST Chenming is a reminder to investors that the stock carries higher investment risks due to management or financial issues, and caution should be exercised when buying or selling. Since April 1st, the company's stock has been further subjected to other risk warnings, but no risk indicators such as insolvency or accumulated losses, which could lead to delisting, have appeared. These regulatory measures reflect a significant uncertainty still surrounding Chenming Paper's production and operations.
这回我向社会低头了。
This time, I've given in to society. I've completely surrendered. I bought a house in Peacock City, Zhou. In 8 years, the price dropped 800,000 yuan, and I'm still paying the mortgage every month. With the little savings I had left, I bought stock in Chenming Paper Holdings. I got in when it was over 4 yuan, and now it's only 1.8. If they delist later on, it'll just be adding insult to injury. Guess I'll just accept my fate. You can't go against destiny. Some people have reported serious environmental issues at Chenming Paper's mill. One TikToker user commented, "I didn't realize Chenming Paper was so close to us. Every day there are so many vents, and the air is full of smoke. The people in Huanggang and Huangzhou have been living like this for 7 years. Now that I've moved here, I realize how much it affects both my health and my mood. I hope Huanggang improves and the air gets better, and I hope the environmental agency addresses the issue." After an investigation, Chinese reporters found that the concerns raised by this individual were indeed valid, and such issues have occurred multiple times. Reports indicate that Chenming Paper has been fined several times for exceeding wastewater and air emission limits and causing odor disturbances. Since 2004, its subsidiaries have been penalized or reported 21 times for environmental issues, including incomplete environmental assessments, malfunctioning pollution control equipment, and exceeding emissions of smoke and COD, chemical oxygen demand. Chenming Shanxi subsidiary was fined over 5.9 million yuan for exceeding wastewater and air emission standards with poor information disclosure. In 2019, the Huanggang Chenming mill was fined 300,000 yuan and shut down for remediation due to excessive odor, nitrogen oxides, and ammonia emissions. Chenming Paper's story began in 1958 in Shandong, Shouguang. It grew from a small local factory into a leader in China's paper industry, with its development largely aligned with China's reform and opening up economic reform. By implementing a pulp and paper integration strategy, Chenming established a massive annual production capacity of 11 million tons in locations like Shouguang, Zhangjiang, and Huanggang. It was also the first Chinese paper company listed on the A-share, B-share, and H-share markets, with a production line that includes writing paper, white cardboard paper, copper plate paper, copy paper, tissue paper, and thermal paper. In the 2000s, Chenming Paper, riding the wave of China's rapid economic growth, successfully listed on both the Shenzhen and Hong Kong stock exchanges, becoming the first paper company to list on all three markets. At its peak, its market value exceeded 40 billion yuan, and it was hailed as a king of paper. Looking back at its development, after becoming an industry leader, Chenming Paper made several attempts at diversification, branching into finance, leasing, real estate, and chemicals. However, these external expansions also brought a heavy burden to the company. By the end of 2018, Chenming's interest-bearing debt reached a high of 60.2 billion yuan. In 2019, the company began adjusting its strategy, announcing a return to its core paper-making business and plans to divest non-core assets. Realizing the risks of its diversification strategy, Chenming Paper began shifting its focus back to paper production in 2019. However, this change came too late. Since 2022, Chenming's revenue and net profit have been declining, and in 2023, the company reported its first major loss since going public, with a loss of 1.3 billion yuan. Combined with the 2024 loss, the company has accumulated a total loss of 8.7 billion yuan in the past 2 years. In fact, Chenming Paper is not alone in facing difficulties. The entire Chinese paper industry is experiencing a downturn. An overseas reporter reviewed the 2024 annual performance reports recently released by a number of Chinese paper companies and found that the entire industry is struggling with a trend of weak growth. As China's only state enterprise in the paper industry, China Paper Investment owns 3 listed companies, of which Meili Cloud also suffered a net loss of 548 million yuan in 2024. Other listed paper companies also reported poor performance. A sanitary paper product manufacturing company, CNS Paper Company's 2024 net profit was 77.2 million yuan, down 76.8% year-on-year. Shangyin International posted a loss of 451 million yuan, a 388.5% drop. These figures indicate that the Chinese paper industry is facing unprecedented challenges. Overcapacity, fluctuating raw material prices, intensified market competition, and environmental pressures are putting significant strain on the industry's profitability. This situation raises a question: why has China's paper industry fallen into such a state, and how can it find a way forward? Observers note that China's slowing economic growth is a key factor contributing to the struggles of the paper industry. In recent years, the downturn in the real estate sector has had a significant impact on the demand for packaging paper. Real estate used to contribute about 15 to 20% to GDP, driving demand for white cardboard paper and corrugated paper in industries such as construction materials, furniture, and home appliances. Industrial paper was also widely used for construction protection. Since 2024, both real estate investment and sales have declined, causing a sharp reduction in packaging paper orders for leading paper companies like Chenming. The tightening of financing and inventory buildup has further weakened profitability in this area. At the same time, downgraded consumer spending has further compressed the high-end tissue and packaging paper markets. In 2024, the nominal growth rate of disposable income for urban residents slowed to 4.5%, with the real growth rate barely above 3% after inflation. Salaries for white-collar and technical workers rose by less than 5%, with some industries even beginning to cut wages. Demand for luxury tissues, wet wipes, and high-end packaging paper from middle-class families has dropped sharply. For example, CNS Paper's Cloud Soft series saw sales fall by around 20% year-on-year, while Chenming's high-end tissue and wet wipe revenues also decreased by 15%, with gross margins turning negative. This shift in consumer spending patterns has not only affected paper companies, but has also impacted sectors such as retail, catering, and tourism, adding pressure to both the upstream and downstream of the supply chain. Also, rising raw material and energy costs are another key factor contributing to the paper industry's losses, and the reasons behind these challenges are quite noteworthy. As a resource-intensive industry, paper manufacturing depends heavily on raw materials and energy. In recent years, prices for key raw materials such as wood pulp and waste paper have fluctuated sharply, while coal and electricity costs have continued to rise. This is what has been keeping production costs high for paper companies. To make matters worse, reports from 2021 stated that China banned the import of waste paper. This policy has further strained the supply of waste paper, driving up raw material prices. Some companies have also been forced to shut down production lines due to excessive cost pressures. Radio Free Asia quoted industry expert Zhang Hongjie, who explained that Chinese paper companies are divided into 2 main categories: wood pulp-based and waste paper-based. Wood pulp-based companies mainly rely on imported wood chips, and the pandemic's impact on trade has raised prices significantly. As for paper mills that recycle waste paper, Zhang noted that due to China's waste paper ban introduced in January 2021, waste paper imports were prohibited. This has led to a shortage of waste paper and rising prices. Additionally, paper production also requires various fossil-based additives, and in recent months, these additives have also increased in price by several hundred yuan due to rising oil prices. Subsequently, reports from Financial Investment News indicated that since March, several paper companies have suddenly announced maintenance shutdowns, and the subject, paper company shutdowns, started to trend on social media. Industry insiders stated that under the pressure of rising paper prices, some corrugated box manufacturers have reduced their order intake. Due to severe order backlogs, some box manufacturers have limited order acceptance, refusing large volume orders. Since then, rising paper prices have consumed some companies' profits. Regarding the issue, someone sarcastically commented and said, "To be more accurate, China's foreign trade policy is like throwing rocks at their own people's foot. The elite don't care. The whole point is to make it look impressive." Another major issue facing China's paper industry is overcapacity, which has created a vicious cycle of supply and demand imbalance. The overcapacity problem in China's paper industry has been building for years. During the rapid growth period of the past few decades, a large influx of capital into the paper industry led many companies to expand their production capacity, resulting in rapid growth of supply. However, as market growth is slowing down, this excess capacity became a heavy burden on the industry. Statistics indicate that the utilization rate of paper and paperboard production capacity in China has steadily declined in recent years, with some categories falling below 70%, well below the international benchmark for a healthy industry. Overcapacity has not only led to fierce market competition and price wars, but also severely squeezed profit margins for companies. Take white cardboard paper as an example. In 2023, its market price continued to decline from the peak in 2022, and its gross margin even turned negative. Chenming Paper's revenue from white cardboard paper dropped from 7.9 billion yuan in 2020 to 3.7 billion yuan in the first half of 2024. At the same time, weak downstream demand has further worsened the supply-demand imbalance. The real estate industry's downturn has reduced the demand for packaging paper. The digital transformation of education and publishing has squeezed the writing paper market, and tightening environmental policies have increased raw material and production costs. The paper industry is trapped in a vicious cycle of price wars and inventory accumulation, severely compressing profit margins. Experts believe that the difficulties faced by Chenming Paper serve as a warning for China's manufacturing industry. The struggles of Chenming Paper and the Chinese paper industry reflect the broader issue of overcapacity in China's manufacturing sector. From steel and cement to photovoltaics and wind power, many industries are facing overcapacity challenges. Behind this phenomenon is a combination of local government impulses to chase GDP growth, companies expanding blindly, and financial systems that fail to properly support the real economy. Overcapacity not only leads to resource waste and environmental pollution, but also forces companies to destructive competition, ultimately damaging the health of the entire industry. From this perspective, the plight of Chenming Paper serves as a profound warning for other industries. At the same time, Chenming Paper's debt crisis reflects the widespread financial risks in China's real economy. During times of rapid economic growth, many companies expanded by taking on significant debt, leading to high leverage ratios. As the economy slows and industries adjust, these companies are facing increased debt repayment pressures, putting them at risk of financial collapse. Chenming Paper's downfall is not only the result of strategic errors, but also a reflection of broader macroeconomic challenges. The struggles of the paper industry are not just about supply and demand, but also reflect the difficulties China's economy faces after years of rapid growth. Some experts have even suggested that Chenming Paper's future may serve as a microcosm of China's manufacturing industry moving forward.